Good afternoon, Scott Redler, T3 Live. Welcome to the first day wrap-up of the third quarter. With that said, came in today, futures were up a bit. In my head, I was like, okay, how are we going to treat 162.10? Are we going to be able to push through it, close that gap, reclaim the 50-day, or will we push through and fail a bit and come back below and distribute more stock out there? Or is it going to be somewhat of a non-event? I would say today, a little bit more neutral. We had the snapback last week where we hit it, 1560 in the SPX, and then we went as high as 1620. We did push a little bit higher, and then it felt like the sell programs were trying to bring the market down, but a lot of stocks still hung around. So I feel like you could have some stocks on that you like because there is some power in some areas, but if you want to have some type of tactical spider short on or a hedge on just in case, I think that also makes sense. Let's just go through some charts and some stocks. You look here at the spiders. We've drawn this chart so many different times, and just play catch up where we are. Here's that trend line, and this was the action area. Okay, we pushed through. So if you were short, you said, okay, you know what, let me get out of my shorts. If we get above, first thing was 161.82, then you had the high here of 162.10, pushed up, but somewhat failed at the 50-day. We closed off the highs. Some people, if you're just trading the spiders, you might be short versus that, saying, we have a bit of a topping tail, same thing we had here that led to a down day. But there have been some stocks along the way that are acting pretty well. So overall, you could say that it's just an area to be sort of neutral. The market's not sure of whether, it's going to be able to have any power overall, but there are some stocks that do have power. Okay, so if you want to look here, here is the low from Friday. I don't think you get overly bearish until the market takes this out, if it does, okay, which was the low right here, which was 159.86. So we'll see if we do some work in here while some bases build, or what could happen is there was money being put to work. Some of the leading stocks broke out, and then after a few days maybe it fizzles out and then we roll over. But overall, some good things to do along the way. First things first, I had to talk about Tesla. Unbelievable stock, unbelievable trader. We've talked about this trend holding, lots of micro areas to be long. A few times we've had this one off the charts. Lots of times I tweet about it saying relative strength. This stock is above the 21-day, above the 8-day, a stone throw away from 52-week highs when the market isn't close to 2013 highs. That shows you strength. You remember when, I think right in here, we talked about, the recall. Everyone started bugging out on the media. Oh my goodness, the recall. I was like, if it technically breaks below the 21-day and closes below, maybe it means something. If it doesn't, you know what? Stay the course. P.S. Boom. You didn't even have to be long it overnight. You could have came in, bought 110.25. I did not come in long overnight. That was my entry. We also had that on the price point sheet. You also could have another entry above that 1490, and it closed at 117 there. So all in all, talked about how this has the ingredients to be a much higher stock price, and it's working its way out as I think third of it's short, and they really have the sky's the limit as far as the innovation and the technology and the adoption of electric cars. So anyway, acting well, on its way. Another stock that hasn't been acting well but gave you some nice opportunity was today, okay, in Apple. I know Apple's been, on the C list, and all of a sudden on Friday, everyone was talking about a potential double bottom, a potential red dog reversal at 393, and then even if you didn't take that trade, okay, what happened today in Apple? First time in a long time, okay, it gapped up and held the gap, right? It closed here at 398 something. Actually, where did it close? It closed 396.53, opened up here at 40. Where did it open? Opened like 402.69, held 401. I actually faded the open real quick and then flipped long and held a gap. Oh my goodness, first time in a while. So we'll see what happens. Can it do a little sideways action, protect this gap for then what could be another trade to retest at least the 21-day, which comes in at 419, another 10 points higher, which would be a nice 3-day trade. Why not? We're being tactical here. If you bought it here, you got paid in your day-and-a-half red dog reversal strategy. If you think it goes higher, it's going to have to, the next big obstacle is 419. As far as some other stocks, Amazon still looking really good. You look at the chart pattern here. This too also showed relative strength in a time when the market came in from 1687 down. Look where this is. This is not even, it used to be a pebble throw away from the highs. Now I don't even know what's thinner than a pebble. A micrograin? No, sand. Maybe a piece of sand. Anyway, with that being said, a break and close above this, and you could see another macro move to the upside to pay investors and maybe even pay traders if they let it happen intraday, and we could grab some size, kind of like what we did here. Remember that 272 trade? That was nice. All that was a tactical trade of the breaking of this downtrend, and you had a nice 2-day move here. Wasn't ready to break out there. Maybe this time with some new flows. Let's hope it happens before earnings. Let's hope it maybe happens tomorrow or the next day. Overall, looks pretty good. Didn't pull back much when the futures pulled back, so we'll see. As far as Netflix, was upgraded this morning. Also had some news. And again, this, after looking pretty weak on Friday, held where it had to. Okay, it engulfed this little inside pennant and closed near the highs of the day, showing some strength, showing that this basing process is still intact. It's still protecting the gap. And if you were short, you had to switch gears pretty quick. If I were you and I was short, I would have switched around 218. Okay. And if you were looking for a long entry, that was the potential spot if you didn't come in long, because there was really no reason to come in long with Friday's action closing the way it did. But you could have switched gears and made the best of it, and now we'll see. Some bigger resistance comes into play. Up here, closer to 230, it has some room. LinkedIn was downgraded today, and it also engulfed it, looking pretty good. Okay, looking like there was still buyers not caring, where it went positive, didn't pull in, closing near the highs of the day at the end of the day. That's showing demand still overall absorbing what happened last quarter. Still looks good. Google is a little lethargic, where it's, I guess, got to take it for what it is. Here's the support going sideways. Here's where it held the 50-day. Did gap up, not much power, but still pretty damn close percentage-wise to the highs, holding in there. Institutions are staying in there where they have to. So, that still looks like a go-to stock. Someone asked me to talk about Facebook. Facebook, it's still on the B list, but overall acting a little bit better. Maybe if it were to take out the 200-day and close above it, it could get a little bit more interest. And then on the other side, people are like, okay, where are there some signs that today's failure could lead to a retest of 1560 or maybe to the 100-day? You look at some banks did reverse and were weaker earlier. You look at the XLF, pretty big topping tail. I don't think it got that high, but it also, just like the spiders, it pushed through this area and couldn't have enough power to close above it. JP Morgan did somewhat the same, where it was stronger and then just reversed that resistance. But again, these are big time, it's going to take a lot of volume for these things to break out, and the market's probably not sure yet. But overall, this is a reason to maybe be a little skeptical, especially Goldman Sachs, which, look where that is. That didn't bounce at all. So if you're looking for something to short in the financials, I think as long as it stays, I guess, below this 154, this could be some resolution to the downside, and that would probably be bad for the banks. So overall, if you're looking for something weak, within the banks, this is something that looks a little weaker. Also, that it's something that looks a little weaker to me is IBM. IBM still, is hanging in there, but to me, this looks like it's going to be a matter of time for it to break this 186 to 188 area. In my 2013 thesis, I said this could be a problem this year. Hasn't really worked out yet. It's just been a choppy big range. But ultimately, you have this big channel. It's back at the lower end to close below this area. And this is like a 20-point channel, which would give you a move down to, perhaps 170-ish, which probably wouldn't be good for the markets, But overall, it does look like it's vulnerable. I don't know if it's going to be this quarter in earnings or what it's going to take, but I would just be a little careful. Go to your weekly chart on it. It's this upper area, and it can come down and maybe want to test a 200-day. So we'll see what happens there. Just be careful. Some guys, I think, we're talking about getting a July put spread, maybe buying the 190s and selling the 170s, or buying the 180s and selling the 170s or something like that. But instead, that limits your risk, or at least your risk is premium paid there. As far as outside, every ONXX had the big gap up on the takeover talk. BlackBerry, I think some guys tried to play a little bit of a bounce, but I think you should just avoid this stock. This is, again, another instance on why if you're going to take anything into earnings, especially if you're short term. You risk with options. So at least if you try to be long, saying, look at this, nice, 6-7 months of accumulation. If it was a good report, it could have broke out and when you could have been paid. But options is a much better way. Otherwise, you're kind of stuck in this. And I always say, I kid around, I was like, I don't know anyone that has really a BlackBerry anymore unless they have a leftover one for 3 years or they're mandated to have one. But if they have one, they probably have something else because they don't do everything on there. And I don't know one person has a BlackBerry 10. So where is all these reports of good traction? But anyway, with that said, I would just let it kick to the curb. As far as the metals, nice day on Friday. Finally, they had a big bounce. Today, gold gave an entry for those who are looking for a catch-up play because silver and the miners filled their gap. So if you look at silver first, this filled its gap on Friday. Okay, so this was a nice trade for us. As either you targeted below 18 down to 17.5, or you said, I'm not going to target, I'm going to wait for a move above 18.30. There was your move. Now it has a little inside bar with a little bit of time. Maybe it goes sideways and then you get another move to get in this gap. I don't think it's going to be as powerful because it's not as oversold anymore as you just saw. It might take some time. So for those looking for GLD to follow in the footsteps, there you go. Okay, GLD looked like there was some forced liquidation while the metals were having a move Friday. Then finally it opened up, closed right here. You had some time to be a buyer around 120, and then it went as high as 122. So it filled the gap. So now it caught up, and now a little sideways action. Maybe it tries for one more, to this area. But at this point, if you were looking for a day-and-a-half trade in the metals, okay, day-and-a-half, don't need to be a swing trader, an intermediate trader, a macro trader. Day-and-a-half tactical strategy. You saw it already. If you're looking for a little bit more and you want to hang on to a third or 20%, as long as it stays in there, you hang on to some, let it build another pattern, and then perhaps you add a tier if it starts to go again. But for that day-and-a-half tactical strategy where on Thursday I'm like, I think you're a better buyer of silver or SLV between 17.5 and 18.5 versus a seller, you did pretty well. Same thing with the GLD. I think we said 113 to 118 or 117, went to 115 and change, and you could have either tactically targeted and then wait for the market to confirm your plan, because all it was a potential setup, and then once on Friday the market confirmed it, that's when you execute on it. Okay, but again, if you're not caught in the downtrend, you're not sitting in a situation where a falling knife has been slicing you up with opinions and opinions, you have the luxury of testing it out with clear eyes, clear heart, what is that, the Texas football, and you could have caught it and made some money there. So anyway, with that said, that I think the easier part of that trade is in the bag, and now tomorrow we'll see what happens. We'll see if today's push through somewhat failure leads to weakness. We've had a lot of gap ups actually in the last few days, so maybe today or tomorrow we get a little softness. But I do think there are stocks out there, like you saw with Tesla, you saw with some others, that give you a little bit of a reason to stay with them if you think you're going to miss them. Okay, and if you do so, just have a hedge on or just keep your size down, because again, it's summer trading. Things aren't closing out on their dead highs, the same way they're not closing out on their dead lows, but there's nice two-way action, and there's nice tactics to use in order to keep making progress in your P&L. This has been Scott Redler, T3 Live, the recap. See you at the morning call tomorrow. Have a good night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.